Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where each morning we take a quick review of where the markets have opened up in Asia and where they're likely to travel through the day. I'd like to kick off with our regular Monday morning commentator, Omar Najia, the Global Head of Derivatives at BB Energy. Omar, good morning. The markets have opened in Asia with a uptick. It would appear that sentiment is a little bit more glass half full than half empty. How do you read things this Monday morning?
Morning, Sean. Look, I think in general, if you look at oil, we've been trading this on WTI. We've been trading this range between 35 and 43.50, let's call it, since June. And I think basically the market is looking to break out of that. My hope is that it breaks out soon and to the upside. But basically the market needs belief. So we've had a lot of quote unquote good news, a lot of optimism, a lot of stuff about the vaccine. We've had a lot of bad news as well in the market, including COVID and lockdowns. So basically, trade doesn't know really which way we're going to go. Over time, I think clearly the trend will be higher. But for the next, month or couple of months, I think it's up for debate. I really don't think that we're going to start, massive sell-offs again. The only thing that I could think would be, those great OPEC people who can't seem to organize themselves, let alone anything to do with the market. If they disintegrate, then that could certainly put the cat amongst the pigeons. But, apart from that, markets should be looking to break out. And I think to the upside, the question is when.
Good morning, Kevin Wright, lead analyst for APAC at Kpler. Kevin, welcome back to the table. One headline that grabs my attention this morning, although it's not something that would have imminent market impact, China set to eclipse America as the world's biggest oil refiner. And perhaps that is indicative of where this market is at right now as we see old, not fit for purpose refineries close down.
I think good morning, Sean. I think the Chinese refining situation is part of a global shift. What we're seeing is the merchant refiners of Asia, that includes China, South Korea, Taiwan, and to an extent Japan, I suppose, in its current guise. What we're seeing is a global shift. We're seeing an east of Suez rising and a west of Suez decline. In terms of refining capacity. And, it was very interesting to note that Chinese refining capacity has trebled since 2000. And I think in the link that you sent, there was mention of the fact that in 1967, US refining capacity was 35 times higher than Chinese. Now, obviously, 1967 is not massively relevant to where we are now, but I think what we're seeing within that story, is that the east of Suez refining capacity is now eclipsing the West. You've got merchant refiners. You've got a situation where basically world scale and world class refining is taking over from the old refining system in Europe, and that's really where we are.
In that regard, the sort of glass half full sentiment that, or not, and I'd welcome your views on that, but China is clearly giving its part to the glass half full outlook. 20% increase in import quotas for next year, January already indicating very positive import levels into China. How do you see that?
Yeah. I think, it's an inexorable pattern. Omar is very active on the little chat here, and he's right. It's refining capacity, it's demand, it's wealth. As he says, it's everything. You get to a situation where, China, no man is an island, I think John Donne once said, but China sort of has progressed so much in the last 10 years and continues to progress that it's just hard to think of any global growth without figuring in the Chinese element, the Chinese factor.
Let's welcome David Rundell to the table, author of a book, Vision or Mirage, Saudi Arabia at the Crossroads. David is also the longest serving U.S. diplomat in Saudi Arabia, no longer, but has the distinction of being the longest. David, welcome to the table. There's a few things I'm so glad you're with us this morning. I want to kick off with, though, is the G20 meeting just wrapped up in Saudi Arabia. I'm wondering at the end of the day, has this G20, given the COVID, it sort of seems to have turned out to be a bit of a damn squid for the kingdom. They really didn't get a lot out of it. I'm wondering, would you concur with that, or what do you think they did get out of it?
Well, I think we're seeming to have this glass half full, glass half empty. I usually don't care as long as it's Chateau Margaux. But clearly they had hoped that the world would arrive at their doorstep and see for themselves with their own eyes many of the transformations that have taken place in Saudi Arabia in the past 5 years. That didn't happen to the extent that they had hoped, but it did happen in the sense that there were literally hundreds of preparatory meetings, and many people did come. Some came by video, but many came in person for meetings where they did see a new Saudi Arabia, where they saw young people participating. There were literally hundreds of Saudis involved in this, and many of them were women. So this clearly, for government officials who were involved in this process, they definitely did see a new Saudi Arabia. Now, in terms of larger public relations, where they would have had, the global media traveling around Riyadh for a couple of days, no, they didn't get that. But on the other hand, they did host a meeting for the 20 most significant economies in the world. And I think there are two things about that. It reinforced to anyone reading the newspaper today that Saudi Arabia is an important country, and King Salman was there and conducted his share of the meeting. So I think, the idea that people say that he can't, remember what day of the week it is, he's not King Fahd, in the end, poor King Fahd, in the end of his life, he really didn't know what day of the week it was, but that's not the case with King Salman, and that was clear. So I think it was a success in the sense that it put them back on the map. It gave, just quickly here, it did give their opponents, if you will, the people who wanted dissent about their human rights record, who could criticize their human rights record, it gave them an opportunity to do so, but they were not effective in getting anybody not to attend the meeting.
Omar, back to the idea of sentiment. You seem to be a little bit in between. Would you consider that the forces of positive sentiment are now winning out in the market, or is it still too much of a downward pressure from COVID lockdowns and other things?
Look, so basically in the market, you want to try, obviously, to make money. That's the only point, basically. So we are, or I am, buying stuff that's further out. So whether it be second half 2021, whether it be Q4 2021. So that, I think people should be long. On the prompt side, it's a bit more difficult. So whether the market starts to rise from now would be great. If the market dips from now, that basically should be bought to buy stuff further out. Why further out? Because it gives time for sentiment to improve. It gives time for COVID to, whatever you want to call it, dissipate, vaccines, I don't know what, blah, blah, blah. But I think basically in terms of sentiment, what you're lacking here is some kind of spark. Now, you've seen it on equities where basically people started to buy equities and now they've run out of steam because they really don't know what to do. On
just
oil,
in terms of sound, if anybody has music in the background, if they have an ability to cut it off, that would be great. Sorry, go ahead, Omar.
So basically, it's to do with, if you can get that sentiment, if you can get that spark to actually come into oil and take the market higher, and that spark is going to be breaking that 43.78 level to the upside. If WTI can break 43.78 and start to move higher, then great. If we stay where we are or trickle down and break $70 to the downside, then, we have one more test. But I think before you were looking at selling rallies, I think now the market's going to shift to buying dips. Again, the only proviso I would say is OPEC. OPEC is no longer what it was. OPEC is now Saudi Arabia and a few of its close allies in the Gulf, let's call it. So I'm a bit worried about, UAE came out and said, we've always been members and all the rest of it, but they didn't deny the story. They didn't say this story is false, which worries me a little bit.
Yeah, they weren't categoric in their denial. I would agree with that. It did feel a little bit watery. Kevin, outlook for jet fuel seems to be the one that becomes the more prominent data point to watch now as the glass half full, to keep going with the sentiment idea, starts to pick up. And I know that in Singapore, where you're sitting, there's plans to open up a corridor with Hong Kong. It was suspended, I believe, for 2 weeks. But nonetheless, it had a lot of take up for that opportunity. What's your own outlook for jet fuel and the Asian outlook for airlines in general?
That is one of the things that we've looked at very, very closely as a company in recent weeks. Jet exports from the major refining hubs in the region, jet demand, jet arbitrage to the west, all very, very depressed. I mean, as you said, there was a proposed corridor between Hong Kong and Singapore, which would have allowed 200 passengers a day to fly between the two city states, and that's been suspended on the back of Hong Kong having a bit of a cluster outbreak. It doesn't augur well for the jet market. Jet cracks are at obviously historical lows. We all know no one's flying. I don't know. I was taking part in a survey yesterday, and I was asked how many flights I'd taken in the last year, and I had to think, and it's one, or maybe two. Sorry, return. The jet fuel market is very depressed. As I say, I don't see how that can recover until we get a more secure and safe world, and until the world is more comfortable with the idea of vaccines and of non-transmission. So the jet market,
even in Asia, given the COVID outbreak, isn't really getting a second wave in Asia.
Well, it had a second wave, but the Asian economies and Asian governments, Asian regimes have been very successful at containing it. Really, so we saw a little bit of a burst back in the sort of northern hemisphere summer, but it was really controlled. And if you look at the sort of the corridors that exist, so between here and say Australia, New Zealand, etc., those paths, those corridors can open relatively quickly. And the Singapore government is being very proactive in terms of trying to sort of encourage travel. I mean, obviously, Singapore Airlines is very much dependent on international travelers. Singapore is a hub for the region. And the Singapore government has been very, as I say, very active in terms of trying to encourage other partners within the region to open up. But it's hard to get the reciprocity within those countries. So
they also have one of the reasons they've been so successful in controlling COVID is that they have a hypersensitivity and low tolerance for any kind of a number. We might tolerate in the West, 10,000 infections a day, whereas in Asia, it's practically next to zero. David, one of the questions I wanted to get your thoughts on that has emerged over the last few days, there's been some reporting, and it's still unclear how accurate it is, but nonetheless, it has triggered some consideration that there's been reporting that the UAE may be looking to step out of OPEC. But whether that's true or not, it has triggered some debate about the idea that are we getting closer to the day in which the Gulf producing countries will no longer look at restricting supply to elevate price, but will be compelled to compete with market share at full production capabilities. I'm wondering, from your perspective, what Saudi Arabia's view on that is in the year 2020 going into 21. Would they ever abandon the current strategy of curtailing supply to increase price?
Over the years, Saudi Arabia has at different times adopted different strategies. Sometimes they do go for market share. Sometimes they do go for price. I think what is significant and what is really unique about Saudi Arabia is their ability to maintain surplus production capacity. And that is a political decision, not an economic decision. And I don't believe that they will change that. In fact, they've announced that they're going to increase their production capacity another 1 million barrels a day. So I think their role as, if you will.
But some market practitioners, sorry, David, would interpret that as Saudi getting ready for the day when they've got to go into full production for full market share competition. That's why they're increasing their capacity.
Yeah, I hear that. And I think that I don't expect them to do that, because I've watched over the years that they always maintain. They may well produce more, but they'll keep, so instead of, producing 10 and keeping 12, they'll produce 11 and have 13. But I would be very surprised if they gave up their surplus capacity.
David, I'd like to ask you about the news overnight regarding Joe Biden's appointment for Secretary of State, Anthony Blinken. I would imagine you must be aware of him. He was the former Deputy Secretary of State. Perhaps you guys worked together. But I'd be curious as to your views of that appointment and what it signals about Biden's foreign policy.
Well, I think Biden has been clear about what his foreign policy is. I think that the new Secretary of State is someone who follows the president. He's not someone, from what I have seen, that has his own specific vision. So he will be a partner with President Biden, and they have outlined what they intend to do very clearly. They do intend to be more internationalist. They do intend to try and rejoin the Paris Accord. They do intend to try and improve relations with Iran. I think they will have difficulty in achieving those goals. I think that their effort to they can rejoin the Paris Accord, but they will not get it through the Senate, and so it won't be a treaty any more than what Obama did, and it could be changed again. I mean, a treaty requires a vote of the Senate. Obama was unable to do that, and I don't think Biden will be able to do that either. How
will Blinken be received or be regarded in this region, Saudi Arabia, the Emirates, etc.? From obviously they would be familiar with him from previous periods.
I think that all depends on the message that he brings. Obviously, the Gulf states are concerned that Biden is going to flip back to a more pro-Iranian stance. However, I also think that this is how would I phrase this?
Pro-Iranian, that's a big word, isn't it? Pro-Iranian?
No, I was going to say, if it works, the Saudis would very much like the Iran nuclear agreement to succeed. They would like to have a peaceful Gulf region. They are a status quo power at the end of the day. So if the Biden people are able to bring Iran back into the family of nations and stop their, whatever you want to call it, there are foreign proxy fighters in various countries around the region, I think the Saudis would be happy. They would welcome that. I think they're skeptical that it can be done.
From a State Department point of view, Anthony Blinken is from the institution. He's familiar with the department, with the global action and working of the department. Is that a positive, do you think, on this occasion?
Well, he's essentially a Biden staffer. I mean, he's not a career diplomat. So, I mean, he's more than a staffer, he's a chief of staff, but, he's not a career diplomat. That said, he has worked in the institution, and that's probably a plus. Yes, I think that's probably a plus. It's certainly a plus for the institution. It's certainly a plus for morale in the institution, which had an antagonistic relationship with Trump and his team.
Yeah, let's go to the survey question for today, which is probably playing up a lot on what this sentiment idea. But I think it's important because OPEC will, I think, be looking at this. What is the oil market outlook sentiment going into the OPEC meeting? Is it glass half full or glass half empty? What is the oil market outlook sentiment at the moment? And welcome everybody to give us their thoughts and vote on that. Omar, looking forward to the week ahead, what do you think will be some signals that could point this market in tipping it towards an upward motion? We've finished out the last 3 weeks higher than we started, 3 weeks in a row. Do you expect that trend to continue this week?
Look, we haven't really moved since the beginning of June, or the middle of June at least, right? So
but now
it's
we're in
all
a
been
momentum. Now we're 3 weeks on the run. Maybe we're going to get a fourth.
Yeah, but usually what happens with consolidating markets, they go up, they test resistance, they go down, they test support, they go up, they test resistance, and et cetera, et cetera. So you get a series of triangles, which if you look at the chart, you basically go sideways, up, down, and do nothing. So I think that's what we're doing so far. You need some kind of sentiment is positive. Everybody wants to believe. Everybody's going to watch the soap opera that's, like a Mexican soap opera that's OPEC. Will they, won't they? Does she love him? Does he love her? And all the rest of it. So what they're going to do, I think, is do what they always, the easiest thing for them to do, roll over, market moves on, that you need something to kind of spark this upside. I can only say that once you have those series of triangles going across and a straight kind of line going across, you need to break higher to bring, new money, fresh money, people taking positions, a bit of excitement to this market. So either we break above 43.70 and off we go to the upside, because everybody who's short will have to cover, or we go below $40, in which case everybody who's long needs to cover, and basically we get an upside or downside breakup.
You don't think we currently have the velocity to break through the ceiling that we've tested before, and on this occasion we won't break through either?
It's like it takes belief, right? So basically you get to where you want to go, and you've got a wall in front of you. So you've got to basically have some kind of belief to kind of start, hitting that wall, throwing money at that, whatever you want to call it. But unless something, sparks that, like, let's say OPEC comes and says, we're going to take out whatever from the market, blah, 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 then that should spark that. But if everything happens the way it's, forecast to happen, the way I see it happening, then I don't see where that spark comes from. I'd be very happy to see that spark. But I think what people will be looking to do is on an easing of the market back towards support, people will start buying it again. And exactly the same thing as what's happening now. It's going up, testing that resistance, but it's finding it hard going because people are selling where we are. And if it breaks that resistance, they'll all buy back. That could be the spark. And similarly, when it comes off, people will basically be buying. If it breaks that support, everybody will sell again and we get a break. So I think people are watching for a break between $40 and 43.70 on WTI. If it breaks that, then everybody joins in. If it doesn't, then it's doing exactly what it's done since the beginning of June. And you won't see, volume pick up. You won't see much participation. And, I'll continue to enjoy OPEC watchers saying, we want to support producers and consumers and investing. The UAE invested $122 billion in increasing their production capacity from 4 to 5 million, I think, and also in gas projects and all this kind of stuff, which is interesting because when people in OPEC put
you're talking about the announcement yesterday. The UAE.
So basically, all this money that they put in, it'd be very interesting to see what green and people who believe in wind farms and Tesla and all this kind of stuff, how they would kind of equate that with this kind of money put into.
And it would also be interesting to see how you square the circle of staying within OPEC with a production capacity of 5 million barrels a day. Those two do seem to be a little bit incongruous. Kevin, the outlook for the week ahead, obviously the contango market is disappearing, and so storage in Asia, the outlook for storage in Asia must be now on the other side of that opportunity that we've seen over the last 6 months.
It is, but storage levels are still very, very high. We, as you know, my employers, my company looks at inventories globally, and we look at China in particular in this region, and levels are at, still the sort of close to where we saw the peaks over the summer months. So does the Chinese system have the appetite or the capability to store more barrels, even if the forward curve was actually paying them to do so? Not really. We're still sort of sitting at 940 million barrels across the SPR, commercial and refinery storage. So the picture hasn't really changed. We're still sitting at very, very high levels, and
we're not seeing a trend drawdown in Asia's inventories.
Well, the peak in July, August was about 960 million barrels, and we're sitting at, I looked it up this morning, we're sitting at 938 million barrels today. So we've drawn down by 20 million barrels in the last few months, but we're still 150 million barrels above where we were at the start of the year. So that to me says, the picture hasn't really changed. The Chinese refining system is still sitting on an awful lot of inventory.
And if OPEC wants to get rid of some of that, clearly increasing 2 million barrels in January would not be the step to take. That would be a little bit counterintuitive.
Yeah, I mean, the issue is, where does it go? You asked me earlier about jet fuel, and we look at jet, gasoline, diesel, etc. The problem is that China can't exist as a refining system on its own. It's become so productive, it's become so efficient that it has to export those clean products elsewhere. And if the rest of the world is struggling to consume them, then why does China need to digest? But why does China need to refine them? If margins are not there, then the simple economic case is you don't process crude. It just doesn't make sense. And so
you'll have to find a way to probably close some of those refineries, the old ones in China. Let's get the result of the survey before David gets the last word today. Big vote for glass half full sentiment. OPEC will like that. David, I welcome your thoughts on the relationship currently in the region between Saudi Arabia and the UAE. Obviously, these have been lock, stock, in perfect harmony for quite some time. But news of uncertainty around OPEC, the opening up to Israel, the position versus Qatar. Are we seeing light come between the two? What's your own reading to the current relationship, and then what are its ramifications for an organization like OPEC, do you think?
I think there's an analogy here between the United States relationship and Saudi Arabia's relationship. There's a lot of speculation now that President Biden will reassess the relationship, make the Saudis a pariah state. I find that extremely unlikely. At the end of the day, the Saudi-American relationship is based on mutual interests, and those are many. And I think it's the same with the Saudi relationship with the UAE. They have many mutual interests. At the end of the day, their interests are aligned. Their economic and political interests are very closely aligned. So what happens around the edges varies from year to year, but the core of it remains the same. And just this week, you probably saw that let's take a look at one area where they have been some tension between them, and that was the Saudi support for Islah in the Yemen civil war, Islah being a proxy for the Muslim Brotherhood, who the Emiratis are not happy with. The Saudis are now distancing themselves from Islah. The Saudi scholars have denounced the Muslim Brotherhood as a terrorist organization. So in that area, they're coming closer together. This has been a source of tension between them. The fact that the Saudis were, if you will, cooperative, and that the UAE didn't really like that, and now they're distancing themselves. So I think that, at the end of the day, their interests are more aligned than different. I would just say one very quick thing about oil prices, and that is that, I don't talk about what's going to happen next week, but I think by the end of the year, the things that you need to look at are whether or not we get a vaccine. And that's happening. I think you have to look at what's going to happen with Iran sanctions, whether they're going to come back in the market. And I don't think they are anytime soon, because I think that both the Iranians and the Americans under the new administration will have demands that the other will find difficult to meet before they. So I don't think this thing is going to just turn on a dime and all the sanctions are going to go away.
Plus, you have elections in Iran coming up next year, which will probably limit the ability between the hardliners and the moderates in Iran to concede anything.
And I think that, at the prices we have today, the Russians and the OPEC or the Russian-Saudi agreement will probably hold. So that's where I see things in a macro sense.
Okay. Well, listen, David, thank you very much for your insights today. Very useful and timely. Kevin from Singapore, thank you as well. Omar, thank you very much for your insights today. And thank you, everybody, for tuning in. We'll catch up with you later during the week. Have an economically productive day and all the best. Thank you very much.